Risks of investing in IPOs. What you must know before entering are in addition, many IPOs have cornerstone investors, who usually need to abide by a 6-month lock-up period. Once the lock-up period expires, the potential selling pressure is likely to cause the stock price to fall. Cornerstone investors are often large institutional investors or wealthy individuals who commit to buying a significant portion of the IPO shares before the listing. Their participation is seen as a vote of confidence in the company, which can attract other investors. However, after the lock-up period, these investors may choose to sell their shares to realize profits or cut losses if the company's performance does not meet expectations. The sudden increase in the supply of shares in the market can lead to a drop in the stock price. For example, a biotech company that went public in 2022 is several prominent cornerstone investors, saw its stock price decline by 25% in the weeks following the expiration of the lock-up period, as the cornerstone investors sold off their holdings. Although some IPO companies successfully become long-term star stocks, there are also many failed examples in the market. For instance, pets.com, which was once a high-profile e-commerce company focusing on pet supplies, declared bankruptcy less than a year after listing in the United States. The company had a strong brand presence and received a lot of media attention, but it struggled with high operating costs and low profit margins. Its business model was unsustainable, and despite the initial hype around its IPO, it couldn't generate enough revenue to stay afloat. This case serves as a warning that even companies with a lot of buzz and investor interest can fail spectacularly after going public. According to statistics from Nasdaq, among the new stocks from 2010 to 2020, about 2/3 underperformed the overall market 3 years after listing. This data highlights the fact that long-term success is not guaranteed for IPOs. Many factors can contribute to this underperformance, including poor management decisions, changes in market conditions, increased competition, and failure to meet growth expectations. For example, some technology companies that went public during the 2010s with high valuations based on their potential failed to deliver on their promises. They faced challenges such as slower than expected user growth, difficulty monetizing their products, and regulatory issues, which caused their stock prices to lag behind the broader market.